All right, I want to give a big shout out to all my St. Patrick Night Owls rocking with us tonight. Before we have a good time, let's focus on preparing ourselves to trade for the next week, along with learning from today's price action. I'm going to show you how I was able to literally call out the low of day on the SPY. If you watched my video yesterday, I told you the best price to buy those call options was at that previous resistance at 389, which was towards the exact lows on the day. I'm going to show you how to master and trade the SPY. For those of you who are within Trader Society, make sure you check the Discord and go to the announcements section. We have a very important announcement that has just been released. With that being said, let's get straight into the analysis. So in terms of the SPY, the team ended up having 60 green today and only 9 red. I was green on the day. And with that being said, the trading plan was to buy call options at 389 zone towards the previous resistance. We were expecting that to react to support without confirmations. In terms of puts, I was not focused and I really didn't do any puts, mainly because it gapped down massively, and we don't buy puts when stocks gap down massively. So for puts, we're waiting for the 397 to 396 range. With that being said, let's go over the most valuable piece of information within this video. So here's what we knew about SPY. We knew it was forming a micro channel yesterday from 384 to 387. Once it had a nice breakout above 387, we finally decided to buy call options at the previous resistance level when it dropped back down towards 387s. And we did the same exact thing today. So you got to ask yourself, if SPY's on an uptrend, it's forming higher channels, turning previous resistance into support, which is bullish. And the macro was also flipping bullish because it broke above that key 394 high-end resistance, right? Where would be the best price to buy the SPY? And this is why I said 389, which was literally towards the lows of the day. See this red line right here? This is the level where I told people to buy call options in yesterday's video, which was the low of day for twice and the best price to buy call options today. Why did I say that? Because look, this is your resistance. Your resistance is right here at $388.96, right at $389. So the point is, if the SPY has a massive breakout, which it did, it went almost to $397. That's a massive breakout. And it never retested this $389 level. It just had a straight breakout, meaning if you use the strategy that I teach you, you would have missed out. You wouldn't have been buying calls for this breakout, because what we like to do is, instead of trying to predict when this stock is actually going to break above resistance, we just wait for it to have a massive, the keyword is massive. You want a massive big overreaction to the upside like this. The greater the spike, the better. The longer it lasts, the better. You want a huge overreaction to the upside, right? And we knew the bear trap was confirmed because this is where it broke above resistance. Right here at $389, it had a nice pullback. And once it broke above the level, it never retested. So another keyword is it never retested. It just had a breakout and it kept on going. We missed out on the initial move at 389. We were buying at 387 yesterday because that was the previous top of the channel. But since it had a breakout, we bought on the retest because previous resistance is going to try to react to support if the SPY remains bullish. So the genius in this plan was a massive bear trap was created at 389 and it was never retested. And it had a massive breakout to the upside at 396.50. So based off the trend, you can visually see previous resistance reacts to support. What are we going to do if SPY has a massive breakout and we miss out on the initial move because we don't try to predict runs and predict that it's going to try to break above this resistance? We wait and miss out first and we wait for a big overreaction to the upside. Then what do we want from there? We want a big overreaction to the downside. And the quicker this stuff happens, the better. And what made it an even better idea in terms of buying the dip today was because it had a bigger breakout. It had a bigger overreaction to the downside. It happened very, very quickly, which is what you want. So write these things down. And also there was a gap. There was a gap to fill above towards this 396, meaning when the SPY drops right back to that previous resistance level, and it tests for the first initial reaction, right? You got to see this stuff before it happens, right? In my video yesterday, I saw it before it happens. I saw this floor forming before it actually formed, because I understood that a bear trap was created at 389. It never retested. And I know if a stock is bullish and it's having a massive breakout above resistance, if it instantly drops right back down, especially if there's a gap to fill above. So if it gaps down, gaps fill above, instantly drops right back down. Bigger the crash, the better. Bigger the spike, better. I know it's going to try to bounce at $389, right? So understand, I'm not even using a confirmation in that sense. This whole initial reaction theory is like an overreaction micro scalp reversal. I have no intention of trying to hold my calls to fill the gap at 396. My intention is to get in when it hits that best price the first time and then buy into the initial fear, into the initial reaction, because this is where the bear trap got created, meaning all of the bears who did not learn their lesson from last time are about to learn their lesson this time. And I'm not saying that it's going to be a massive bear trap again, where this just rockets back up to fill the gap, even though that is high probabilities. What I'm saying is, in terms of putting your odds in the favor, if you were to enter a scalp, a trade where you get in and out, the most logical decision you can make is buying the calls when it goes back to that previous resistance level, because that's where it's going to try to form the floor and form the bounce, because it had a huge, massive breakout, and then it had a huge, massive crash to the downside. That's what you want. You want a massive, quick breakout, and then you want a massive, quick sell-off. What makes it better? If there's a gap to fill above, which there was, then it's going to try to reverse and fill the gap. So that's the genius in this, folks. So use what I'm teaching you and you'll see. You'll start to do extremely well. So that's the game, and that's the trade. We took calls at 389. I alerted it real time. It was great trades, and I kept riding it back up when it was towards 389.50 and even towards 389.60. I made some nice profit on calls today. So that's the game, and that's what I want you to focus on in terms of one of the trading strategies. So just to quickly recap, you identify a resistance level. You don't try to predict that it's going to break out. You wait for it to break out, and then when it breaks out, this is what you want. You don't want it to retest. You want it to just keep on going. The higher it goes up, the better. And then you want it to sell off just as quickly as it had a breakout. You want an overreaction to the upside. You want an overreaction to the downside. When it retests the previous level right here, and this is how we knew that it was the bear trap level, because when it broke above this resistance level right here, it had a massive breakout. So when you see, oh, that's the resistance, it's sold off right here. If it breaks above and has a massive breakout, that's where the bear trap was created. So when it retests that level for the first initial reaction, when everyone's fearful, right, you need to be confident in buying call options. That is the best level possible. And you do it once or twice. You don't keep on hitting it. If you keep on hitting it, it's going to work till it doesn't. In my experience, initial reactions work the best time. The retest can do well too. This was the retest and this worked very well, but it formed lower highs. In my experience, the initial reaction, the people who see that trading is an actual work of art, and it is highly predictable. If you're watching these videos and utilizing the information that I'm telling you, you can see it beforehand. There's an obvious roof at 389. I don't tell people that it's going to go bullish and break above 389. I don't do that. I tell them, wait for a massive breakout, wait for a massive crash, and when it drops back down to the previous resistance for the first time, then scalp the calls. We do not predict anything. So that's the game. That's the best setup at the best price. That's what I need you focused on. Save that pattern, save that trend, utilize this information. Now, in terms of next week, there's going to be a new update on Sunday. This is what I can say now. Taking a look at the daily chart, not the most bullish candlestick. We finally got a red candlestick, not the most bullish. You can see right here, last time it formed this candlestick right around this price, it went lower and then it spiked. So just keep that in mind. That's one thing I'm going to bring awareness to, right? So it went lower and it spiked. Not saying it's going to do that, but that's just one thing I'm seeing with that candle where we can potentially crack. Now, this is what I need you to understand. In terms of puts, just do this. This is where we're buying puts, and this should work very, very well. The reason why I titled my video yesterday Bull Trap is because it was the first, this is the key word again, initial times, first initial reactions. See it before it happens. Right here, this was previous support at 397. The first time it's going to test that previous support, it's going to try to crash, have a reversal, and sell back off to the previous resistance that wasn't tested. Now, since it's tested and reacting to support, it's going to try to go overall bullish to fill the gap again. And then they're going to try to sell it off. So don't you see that what they're doing? Don't you see how like simple this can really be? So in terms of next week, I need you to be focused on put options at this level only. 397, the exact peak, and then the gap right here. There's a gap to fill at 396.11. 396.11, 397, put options, very, very simple. Now, in terms of call options, if this does drop on Monday, early into the week, they will try to reverse this. So if we crack 389, then the next level where it's going to try to spike is going to be like towards 387. So keep an eye on 387 and keep an eye on 385.50. But that's more of like a lotto zone. What I need you to be aware of as well in terms of call options. So if it doesn't crash, 390 is make or break. 390 is make or break. If that holds up and reacts as support, then it's going to go straight to start to fill the gap. If 390 breaks down and reacts as a resistance, they will and should crack 389. If 390 holds as a resistance level, as a roof, they should crack 389, and then they send it to 387 to 385, 386 to spike, right? So it's a tad bit tricky. We know the easiest thing to do is to buy put options at 396 to 397 zone. That's easy. That's simple. In terms of calls, it's a tad bit tricky. So what you need to understand is previous resistance is reacting as support, which is still technically bullish. As long as we hold 389 to 390, we go bullish and it starts to break above to fill the gap. And we're scalping in and out, right? So if you're buying calls at 389, where's the resistance? The resistance is at 390 and 391. So that's where you start scaling out and selling. And I only really use one price target, right? So keep an eye on that zone. It's make or break, and there is high odds as well. So if we're staying under 390, then there's high odds that we crack 389. If we crack 389, we go to 387. If we crack 387, we go to 385. If there's somehow some sort of bloodbath, then that best level would be 384 and 381. So that's what I'm keeping an eye on. My main levels of focus are going to be 390 and 396, 397 in terms of puts. It's really only focused on 397. And like I said, with calls, you have to be a little bit careful. If you do end up buying calls, understand it already worked twice at 389. Daily chart shows we can pull back before spiking, or we could spike before we pull back. Just understand 389 is make or break. If it cracks, micro goes bearish, and then the macro is going to try to flip bullish again, in my opinion, in terms of, well, where can the micro bottom be if it flips bearish? 387 to 384.5 range. It's a little bit tricky, right? So we just got to be careful in a sense. We're going to master this and we're going to crush this within Trader Society. If you want to be a part of Trader Society, it's going to be the first link down below within the description. It is a one-time fee. You get lifetime access, and we are going to be raising the price end of March. So if you want to lock in and get the best deal you can possibly get, this is the best time to be joining. And you can use some of the weekend to study the video lesson library. There's a video lesson library that teaches the entire gap trading system, that teaches you how to master SPY as well. Over 100 hours of content in terms of video lessons step by step, along with the live streams. The live streams that I do are recording as well, so you can go back and watch them if you don't want to participate in live, or if you just want to rewatch them. So everything's in there, man. If you want to trade live with us, if you want to master the SPY in terms of the SPY floor, that's the money-making floor, it is all in there. And for those of you who are inside of Trader Society already, make sure you read the announcements. It's a special announcement, and I'm looking forward to working with you guys. We will see you in the program.